Hello, everyone. Thank you for joining me with Sam Wong, Finance and Analytics Services Team, LLC. Just give you a prospect for last week, and we'll talk a little bit about Netflix. The market was mixed earlier of the week until streaming giant Netflix, which is symbol NFLX, reported subscriber loss. Though the company beat their earning expectation, the stock lost more than a third of its value in a single day, dropping 35% Wednesday. Shares fell to their lowest level since January 2018, as you can see in the screen. It was as high as when the movie that was very hot in productions, and last year in around Mayish, and you're driving to $700 at the time. That was pretty high end there. In a 600 something, and then go back up to 700 in November time, and then you drop it real significantly, and you can see it continuously in the downward trend over the last 6 months. And if you look at a 5-year timeline, the stock was dropping back 152. So the chances of this is, if you look at 5 years, Netflix have been 100, 152 in 2017. So most likely, if you ask me right now time to buy or not, I would say probably wait for drop to below $200. And especially for those who already own some share, potential $400, you have to buy some more to dilute. If you believe this company continue to be the future on driving the market will be strong. One thing to be just to think about it, the thing was so fast and furious that Netflix is now worth less than 100 billion, down from its 308 billion market cap in November. Netflix point to the prevalence of password sharing, growing competition, but again, what the CEO didn't understand or the team didn't realize, sometimes they ask people to do a lot of this core data analytics and forecast. Maybe the tool wasn't that great and really didn't realize that how much you really take up people, when they raise the price. So part of the thing I think they make a really bad move is they shouldn't have raised the price. People always believe raising a price is the way to drive the revenue, drive the earnings. Yet in America, they always forget about retaining of customer loyalty, make people stay within your business when there's competition out there. So that was really a bad move there. And then also the way talk about passport sharing is another problematic move. While I'm not necessarily supporting password sharing, but if it's the same household, well, the four people, in a family, they can't afford or they don't want to be afford to buy one, because you got to remember this, right? This is not a must. So this is a luxury item. If you have a luxury item, you take people up, people say, forget it, we're not buying it. So I'm not sure what strategically Netflix will do. I own some share of $400, so I'm a severe loss right now. But yeah, the problem is really the mistake that will be made for the market analytics driving that, right? So what I'm trying to say is a lot of company thinking raising price is a solution for their competition and making more money and how they continue to produce. Well, you may not necessarily be the case. If it is that easy, they really not need a CEO. Anybody can do the job. So something to think about, right? And the Warner Brothers Discovery WBD 6% low on same day, which proceeded to become a 3-day strict sell-off. And also, if you look at Disney propaganda of Disney, the stock also really have hot hit because of they also involve the streaming business and also some issues with the self-governance within the business right now. So something to watch for. Not to say the stock not working the fundamentally. If you look at evaluating the balance sheet, what they're growing, years ago they were $90 to $110 during the pandemic, and now it's growing as it proceeds, and they're back to $120 some dollars. You gotta look at the valuation from that perspective. It may have to be longer range because the market really surprising at this point. People worry about inflation, and not necessarily inflation, particularly is interest rise. HCA Holding fell 22% after reporting mixed quarter result and cutting off its full-year guidance following the impact of pandemic and rising costs. So what also just go back to Netflix is the losing ground to other streaming company yesterday, Wednesday, HBO and HBO Max reporting having 76.8 million subscribers in first quarter 2022. There's also uncertainty about the source of its future plans, what they're going to do when they lost momentum and their subscribers. So it is sometimes when you make a mistake, it's very hard to get back. I mean, the strategy is to increase advertisement, inject advertisement into the business. I think that is something need to be very careful reevaluated. If they decide to do to take on more subscriber, then this stock is done and end. So something to think about as an investor or shareholder. You have a right to vote. So you got to voice up your opinion to the CEO and let them understand that's not a good move. Well, other company doing it doesn't mean you just follow, right? And in particularly, if you don't do advertisement, that's how you push to make people retain in your business why you're better than the other competitors, right? So something to study careful about. But again, at the end of the day, right now, again, the stock was, if you're 2017 was $150, not like $40 and growing to $400. So it still lost a lot of, particularly, it really lost a lot of steam right now. So I would say if I were to buy in, I would probably buy it in $200 and then I will buy another layer $175 to $180 to dilute my position. So just something to think about. And in the long run, I mean, the company is still making money even though they lose subscribers. And like I said, if there's another quick movie, like the Squid, right? The Squid 2 coming out earlier than anticipated, then you will have probably driving more subscriber back. So again, the question really is for the CEO to think about what they think the company is so great when the competition out there that make them unique and different. Well, besides the prices, what else? You really need to think about the customer. That's really the key. And I think a lot of time CEO just forget about it. They think about their own mentality and they think they can control the customer, drive the customer choose what they have, but that's not the case in the new millennium world. And then what driving the market down as well is on Thursday, Fed Chair Powell and they get together in an IMF meeting. Europeans and with the central bank president Christine Lagarde want to respond aggressively enough to stop the run-up prices. So then, really that drove fear to and again, potential economy deterioration, in which recessions further. So you fear to sell off. Dow Jones alone was down 981 points, and Nasdaq was down 355 points. On Friday, the S&P Index 500 index slumped from the third straight day for a total loss of 4.25%. The 30 component Dow Jones Industrial Average tumbled 3.8% over the final 2 days trading week after losing 2.1%. And this is how you look on the momentum in 5 days. It actually down 1.7 for 600 points. The most serious is really one day you were dropping 981 points. So that is really what the driver is. So the first beginning of the week wasn't as bad, but until Powell come out and talk about all this stuff, which doesn't help in the market. And a lot of time because it's the fear. So what happened is I hope Powell will get the lesson learned. Although he keeps saying he will watching for the inflation closely, associated with interest rate rises to learn the lesson in the past. Which if you look at the history of 1980, I believe there were time interest rates skyrocketing 20%. There was also a time the interest rates rise to a point that they actually have to backdrop it because it really didn't help inflation but causing a lot of jobs. My biggest concern right now is while the unemployment rate for US is 3.8%, what if it go back up to 6% because the inflation rate was not under control, but yet inflation causing a lot of company cut their spending, cost reduction initiatives, which is seen in America all the time. And the quickest way, a lot of companies have a false impression, is to cut people. So they cut people, that's the faster way to get the effect. So the economy with that will only creating an even bad solution. I don't think the U.S. should continue to blame consumers saying there's a lot of cash, they're rich, so let's buy more. And more likely because everybody is not stupid in the world today, and if the world continues to tell them, the media continues to say inflation out of control, things are getting more expensive. You want to buy a car, which is electricity from last week, let's say $30,000. Well, you went to the shop again, you hope the price will go up, and instead they call you and say, hey, the price just dropped up another 8% now, $32,000, you buy or not. So with that, you're just driving more people to understanding the same thing with Shanghai COVID, right? And you're just driving people now our food. The government tell you, don't worry, it won't be our food, everything will be fine. But yet, that's just losing the faith of people, that understanding and what they've seen in the past. Then that's actually explain why there's a sale on Friday with the Netflix with the first one that creating such a disappointing outlook, I would say, because the earning again is actually rich in it. So hopefully the coming month will be, weakest will be better months as earning season started again. Manufacturing is under pressure as the war in Ukraine push up the price of energy and key component continues to scramble. Global shipping, again, you still have this, we heard about this stuff, right? Supply chain issue. Well, the supply chain issue for some reasons is still not fixing it. Well, we're realizing that inflation is no longer transactionary for how it took so long to recognizing that, and same thing with supply chain. So what exactly people or the world actually working collaboratively to resolve the issue? The war doesn't really help, but make things worse, right? Our Conquer saw its share sink 70% on Thursday after you warned the supply chain disruption could hurt demand. Other news though, well, I'll share some good news with you at the same time. Bed Bath & Beyond, which is BBBY, jumped more than 6% and report that the company is feeling interest for its Bye Baby business. In addition, there's another good news. Among all the stocks I recommend, of course, some of them are down, taking a hit really bad and suffering like Chinese stock, but airline actually took off and then is in this challenging environment hiking rates. So demand is stronger than I have ever seen in my career, and that's ever before business travel fully recovered. United Airlines CEO Scott Kirby told analysts on Thursday, saying that. So the share of United rallied more than 9%, and actually, if you look at it, it's over $51 when a week ago it was about 45.30. So if you are bought it in, you get 10% there. And again, I still believe that United Airlines is a good example of very strong leaders of the market and of that industry. And you look at it, it was $90 pre-pandemic. It's stronger to 10. I think it's $10 or $15 now. I don't even remember that. They run our business. You survive. So eventually, people will go back to travel because you would learn to live with the virus. And I mean, we're really trying to back to the normal, right? And right now it's still, at least in the United States, although XE start to spread around, but it's still pretty well contained at this moment. It wasn't really, causing shutdown, although there's some attention to be focused that the medical expert continue to warn the nation. Last week, stock have been taking a beating even in general. Most stock beat their earnings. Recession, high inflation, excessive valuation, war, and four major long-term worry that usually trigger bear market. Russia has a very high expectation of future outlook with the current valuation. Microsoft, symbol MSFT, and Alphabet GGOL released earnings on Tuesday after market close. Facebook, Meta platform, symbol FB, will report on Wednesday after the close, followed by Apple, symbol APO. The analysts on Apple and average projected company will post $1.43 a share profit on sales of $94.15 billion, and still a very strong company. Amazon, symbol AMZN, was also reported on the largest e-commerce company will deliver $116.46 billion in sales, producing per share profit $8.37. That's the consensus. All four stocks have fallen so far this year, with Apple losing ground 9%, Amazon down 13%, Alphabet dropping 70%, Microsoft off 18%. Which again, $300 is kind of like a ground for Microsoft from a technical perspective. If it doesn't stay around and push it up, cutting off that 50 days average, it's just going to keep dropping down. More than 140 companies deal to report results over the course of the week, including consumer good giant Unilever PLC, symbol ULVR, Nivea, Mister, symbol BIG, along with leading bands UBSG, symbol Deutsche Bank, symbol DBKGM, HSBC, symbol HSBN, and symbol BALC. At the same time, core durable goods order, CB consumer confidence will be announced Tuesday, pending home sales, retail sales will be on Wednesday, GDP and initial jobless claim on Thursday, along with Germany and Canada GDP and China key manufacturing PMI will be announced coming Friday. Global oil benchmark Brent US crude West Texas in the middle of WTI benchmark sell down Friday as a reaction to the Shanghai lockdown. We are looking for catalyst dry markets momentum and investor buy a dip. Again, confidence is everything. It's the key word for investor sentiment drone market overall position. So right now, last Friday, why the sell off because of the Powell coming off to say something that the interest rate will continue to rise in May by 0.5%, June 0.5%, while some people even forecast now 0.75% because of more aggressive combat inflation. Again, I provide a very simple proposal that nations and global economy should work together as a whole. All the companies should come back and discussing together how to drive cheaper goods and more communication, limited the barriers to transport goods. So then you will alleviate the demand out there that was still pretty strong at this moment. So the tariffs between U.S. and China should be really cutting, really negotiate and give it a break. That's the fastest way to stop, the inflation. Continue adding interest rate. You may reach there at some point, but not going to be close. Just like transition was inflationary. Well, how long? 6 months, a year. Now it's recognized as a fact. Okay, then now what? Take another year to cool down. So I don't think this is a sustainable market, especially oil will continue to rise. Some projected to be $120 to $150 per barrel. Well, what kind of world would that be if that's the case, right? So I again looking for hopefully there's some great and surprise earning coming week, and also there's some momentum, a catalyst to drive the market, upward. Asian market are down right now with Hang Seng Index down 500 points more, and Japan Nikkei's too. And all three majors were still a negative pre-market, especially Dow is still down about 250 points. We've seen the market as being corrective shown last year, but then we bonded to record high over the next 3 months after that. Disappointing earning whatnot, and it came back down and rebound. So will this be possible this time? We've got to really watching, and we really need that. Hopefully there will be some good news in driving the market. And again, if you're buying some stock right now, you will want to sell. Against the advice is sell at a strength. So if the market rebound and go back up, you may want to consider walk some of your portfolio. Buy at a dip. If the stock comes down, it's a much lower. Like Tesla, you'll be surprised, and you could go down to $700 again, right? I'm telling you, you may think I'm crazy right now when they're at $1,060 right now. But look at Netflix. One day it lost 35%, right? So a lot of stock you need to adjust lower. If you're interested in buying it, you really want to look at it lower at 25% adjustment that time. If you don't buy it, then don't get it, right? Or you can buy now and adjust some more at 25% or 30% lower than the point of Friday. But hopefully, I see the market now is, the future still lower, but hopefully we will rebound in the morning at this week when the big high tech reporting earning, you will have some positive news. Thank you very much.